I mean, the consumer spending is the key and the key engine for the business cycle in the US and all over the places. I mean, if we look at the numbers of the Q3 GDP growth rate, it has been supported massively by the consumer spendings. And in this context, if we have a drop in the oil prices and energy prices and gas prices, it could give another support to the consumer spendings. So, and at the end of the day, if we have a strong, I mean, not very strong, but a decent, if we have decent numbers for the Q4 for the GDP, it will be, I mean, send a signal to the market that the Fed is not ready to cut the rate. And this is, I think, maybe the key discussion that we have to with investors. I mean, where the Fed will put the rate at the beginning of next year. Is there any chance to see the Fed cutting rates or maintaining them at the current level? And in my opinion is that now it's too soon again, given that what we just said, I mean, on the consumption front, on the inflation front, to see the Fed, I mean, pivoting now to a dovish stance.
Quick one from me, Mabrouk, as well. Nice to see you, sir. A US earnings forecast for the next year have put the idea of recession behind us. That's your words. I think that's a stunningly bold statement, sir, to say that that what we're seeing now from the earnings say we're just not going to have a recession. You think that's the case, though?
Well, earnings, when you look at the earnings actually for next year, expected for the next year, they are clearly, I mean, growing and compared to this year. The point is that earnings are still, I mean, leading the business cycle by at least, I mean, 3 or 5 quarters. So what we can say, if we think that we have reached, I mean, the bottom for the earnings at the Q3, for example, I mean, the bottom of the business cycle could be reached, I mean, in the middle of next year, let's say the second quarter of 2024. So in that context, I mean, the market is forward-looking, as you may know, of course, and it is not, I mean, looking at the current situation, but looking at what could be the situation next year. And if the market is anticipating at the aggregate level, I have to say, earning growth, positive earning growth and solid growth, especially in the US, it will be, I think, a strong trigger for the equity market and to see, I mean, the prices increasing in the US especially. I mean, US is a bit particular, is a specific case because we all know that the U.S. economy in the U.S. stock market is a leading one, and the expectations on that front are essential to anticipate and to make sure that we are capturing the trends on the equity market. So I do believe that the growth will not be contracting so much. I mean, yesterday we had some statement coming from the Fed, some Fed members, and clearly they signaled that the soft landing scenario is still on the table. So no major contraction of the U.S. economy. Maybe the bottom will be reached, I mean, in the middle of next year, but the market is looking ahead, and the market is anticipating that the earning growth will be strong and positive through 2024.